Good morning. Welcome to Chaikin PowerFeed, your daily market digest for Friday, June 15th, 2018. Happy Friday to everybody. This is Dan Russo, your host of PowerFeed TV, Chief Market Strategist at Chaikin Analytics. You can find me on Twitter at DanRusso_CMT. Today and every day, PowerFeed TV is brought to you by Chaikin Analytics in conjunction with StockCharts.com. Stock Charts TV. You can get your free daily Chaikin Power Feed at www.chaikinanalytics.com/PowerFeed TV. So jumping right into it, U.S. equities were mostly higher in Thursday's trading. Utilities led as rates fell, while consumer discretionary was also a leader on media strength. Financials were the biggest laggard, also a culprit falling rates. Treasuries were mostly firmer, with the curve flattening. The 210 spread finished at 37 basis points, near the lowest level since 2007. The dollar was stronger against the major currencies, notably the euro. That was following the ECB's meeting. Gold settled up about 50 basis points, and crude oil finished up 40 basis points. Breadth on the New York Stock Exchange was positive 1.3 to 1, and breadth on the NASDAQ was positive 1.4 to 1. Worth noting that the NASDAQ did make a new all-time high yesterday. So jumping right in, it kind of squares up the way we've seen it. It's really been a boring week considering all the macro and everybody was getting ready for what could be an exciting week. Funny how the market does the exact opposite of what you think it's going to do. Kind of really haven't made any progress this week. Market's spinning its wheels just underneath that resistance at 2,800. And I think that could go on for a while. You know my stance. I think that this consolidation has happened within the context of a secular uptrend, and I think that we are in fact going to move higher. Support comes in at 27.41, then 27.10. You have the rising 200-day moving average at 26.54. RSI continuing to remain in bullish ranges, and that's encouraging. And the Chaikin money flow indicator remains solidly positive, even as the market makes no progress this week. Resistance, as we've said, comes into play at the 2,800 level. And then after that, I don't want to crowd the chart with too many lines. We're kind of looking at this 28.20 to 28.25 gap down here from late February. That would be the next logical spot should we push through resistance at 2,800. Your market in a minute. Every day as a PowerFeed subscriber, we will tell you what we think is going on at a high level and what we think is important. Stocks closed higher following central bank meetings around the world over the past 2 days. Rates fell, helping the bond proxies but hurting financials. Trade tensions are in focus again. President Trump came out last night, announced $50 billion in tariffs on Chinese goods. However, it is worth noting we haven't heard what those goods are going to be yet. Personally, I think this is all part of the president's plan to bring everybody to the table to negotiate. Key market themes signal risk-seeking environment generally. Every Friday, I look at some of the key themes taking place in the market, some of the key relationships, like, small caps relative to the market, the FANG stocks. We'll look at that one today. See how high yield is performing relative to investment-grade bonds. These are all relationships that are going on under the surface that could give you a clue as to how investors are thinking. But because of those trade tensions last night, futures do point to a lower open today. Chaikin power bars for the major indexes getting worse for the Dow, but again, Dow is 30 stocks. You can see it was the only group down yesterday. S&P 500 added 25 basis points, trying to get back to that positive side. It looks like we did add some bullish stocks yesterday, but not yet positive. 90 bullish or very bullish stocks, 105 bearish or very bearish stocks. NASDAQ is leadership. Small caps are leadership. You see it here in the power bars. For how many weeks now has this power bar been skewed more than 2 to 1, now over 3 to 1 in favor of the bulls for the NASDAQ? And you've heard me harp on it for weeks, small caps over large caps. So that continues to be the theme. I think within tech, you want to own the large cap names. Broadly speaking, though, from a strategic standpoint in the market, we favor small over large. Bonds, nice uptick in price yesterday, downtick in yields. We'll get to that a little later in the show. And because of that, the bond proxies did well. Utilities and real estate. Utilities were up over 1% yesterday, but look at the power bar here. I mean, this is still a lagging group as far as I'm concerned. You can utilize strength to sell weak names. 2 bullish or very bullish stocks for 12 bearish or very bearish stocks. According to the Chaikin power bar, small cap stocks are more bullish than large cap stocks. Major indexes remain mixed. Our stock of the day today is actually a real estate stock. This is kind of the beauty of having a quantitative model. It takes the bias out. Generally speaking, I don't have a favorable view of the real estate group. I think that strength can be sold there, but you hear me talk about it all the time. Utilize strength to sell the weak names in the group. Our model has identified a very bullish name within the real estate sector, ticker AMH, American Home. Very bullish power gauge rating due to very strong price volume activity, attractive financial metrics, and positive expert activity. The stock does have weak earnings performance, though, but when we roll up all of the factors, we do come out with this very bullish rating. And like we said, you know what? Stock is strong and real estate's been strong of late. Maybe there's a change of trend going on. Who knows? We'll keep an eye on it. However, do I want to get involved in this stock right here, right now? Probably not. We do have the very bullish rating, right? But we're still lagging the market, and we've been lagging the market for 12 months. So the dynamic duo is not in gear. Additionally, the stock is overbought based on our overbought, oversold indicator. Money flow's been good. I mean, it's been strong. We are above the rising long-term trend line. Looks like you do have some resistance in here in the $21 to $22 area. So, I kind of look at the whole setup here and see a mixed bag. From a strategic standpoint, this is the type of name you want to own. A very bullish rating, strong trend, strong industry, but the tactical portion is not there. It's not leading the market. It's overbought. It's just not there yet for me. Add it to a bullish watch list. If real estate does continue to work for some reason, this is the type of name that you'd want to own, not the ones that are bearish or very bearish. Our sector tracker, tracking sector movement over the last 5 days. Discretionary has been on fire. The staples getting a counter trend bid. That's a group that I think will continue to do poorly. I think you want to utilize strength and staples to isolate the weak names. One in particular that I don't like, we've spoken about it here in the past, is Coca-Cola, ticker symbol KO, triggered a sell signal in Chaikin Analytics today. So for you Chaikin Analytics subscribers, check out Coca-Cola. It's a name that I highlighted as a bearish idea back on June 6th. Technology creeping up. We like to see that. Financials, as rates come in, financials are getting hurt. Energy is lagging. You've heard me talk about potential further weakness in the energy group, so we're not going to harp on that any further. One of the groups, though, where I have been extremely bullish in my morning note to Chaikin Analytics subscribers has been this software and services group, and it's highlighted here today as our industry in focus. And this is kind of like a picture is worth 1,000 words. 50 bullish or very bullish stocks for only 2 bearish or very bearish stocks in this group, and over the past 6 months outperformed the S&P 500 by 17.5% and still has a very strong power bar ratio. It's currently ranked number 3 of the 21 subsectors that we look at, and actually moved up a slot over the past week. So some of the indicative names here, names you want to look at on the long side, right? Top-down methodology is to identify the trend in the market, which we think is up. Identify the strongest groups in that market, software and services, and then identify the strongest names within those groups. Very bullish ratings on Verint Systems, Zynga, and Glue Mobile. These are the types of names that you want to be looking at for ideas on the long side. We're going to take a look at one of them today. Verint, ticker VRNT, closed at 45.80 yesterday, up 22 basis points, kind of in line with the broader market. Here's that very bullish Chaikin power gauge rating. Strong trend in a strong industry. Going to the bottom of the chart now where the ribbon tells us where we've been, and over the past 12 months, we've been either bullish or neutral. However, we are now starting to strongly outperform the SPY for VRNT. The dynamic duo is in gear here. Market in agreement with the model, as we like to say. Chaikin money flow, strong bullish intensity. Stock is above a rising long-term trend line after breaking out above the $44 to $45 level, but that breakout did register an overbought signal on our overbought, oversold indicator. So we're going to wait for this one to maybe stabilize above 45, maybe even 44, become oversold. That's your trigger to get long, all else being equal. Very bullish, strong trends, very, outperforming the market. Just don't want to buy a stock that's this oversold here, but Verint, VRNT, being added to one of my bullish watch lists. What's trending? Let's see what was moving yesterday. NKTR, the stock's been on both sides of this screen for the past couple of weeks. A lot of volatility in small and mid-cap biotech. Royal Caribbean, a neutrally rated stock, RCL, up 5%. Comcast and Disca, 2 names in the media space. A lot of activity in media following the agreement or the okay for AT&T to buy Time Warner. We're going to dig in on a media ETF today. Take a look and see if that makes sense. On the losing side of the table, Mylan Oracle, neutrally rated stocks down 5% or around 5%. WAT is a very bearish stock. You want to isolate that one. A very bearish stock that acts weak in an up tape. You definitely don't want to own it. If it's in the portfolio, you want to get it out of there. HBI, CXO, other weak names, though they are neutrally rated. So rates fall, helping the bond proxies. You saw utilities outperform. You're seeing real estate do well. Here's the 10-year U.S. Treasury index yield. Resistance kind of at the 295 to 3 level now. We're kind of struggling, spinning its wheels. After the strong run that we've had, consolidating here, it's finding support at the rising, this is the 50-day moving average. The moving averages are still rising. The RSI is shifting to bearish ranges. That's what we're keeping an eye on here. You could see further consolidation near 3%, but odds favor an upside resolution. That is, in fact, my base case scenario. But listen, if the facts change, we have to change our minds. We have to be nimble in this market. So we'll continue to watch this here. But I do think we ultimately are going to resolve to the upside. I said that media is in focus. So let's take a look at the Invesco Dynamic Media ETF. The ticker symbol is PBS. That's kind of, I love the guys who come up with these, with the symbols for these ETFs. This ETF is leading the market, but it is currently overbought. Generally, strong Chaikin money flow throughout 2018. It's a breakout over the $32 level as far as I'm concerned. So for me, I think you want to wait. If you're looking for media exposure via an ETF, you don't want to try to pick the next takeout candidate. That's a tough game to play. But if you just want broad-based exposure to the group, I think that this is the way to play it through this ETF. However, I think tactically now is not the right time to get involved, right? You know, you've seen this strong vertical move. Money flow is strong, but it's overbought. You know, wait for it to consolidate a little bit, you know, in this kind of $31.50 to $32 level. I think that then allows our overbought, oversold indicator to work itself back into an oversold condition. And as long as all else remains the same, right? It's leading the market, strong money flow above the rising long-term trend line. I think that's when you want to get involved, right? You know, this is extended to the upside. You can clearly see that. I think it's higher risk to get involved here at $32.92. I think you want to wait for a pullback to the $31.50 to $32 level to get involved in PBS for your media exposure. Like I said, on Fridays, we look at some of the themes that are driving trading, and one of them is the FANG stocks. I actually add an A. FAANG stands for Facebook, Amazon, Apple, Netflix, and Google. This is a custom index that I have built, and you can see it here. This is 2-year chart, or 1-year chart rather, breaking to all-time highs, confirmed by momentum. I mean, look at it. Throughout the past year, the RSI of this index has never become oversold. That speaks to the strength of the trend. I mean, you've heard me talk about that a lot. However, we are currently overbought, and as you can see, when we've become overbought in the past, there's generally been a decline. I mean, back in early 2018 with the entire market, right, massively overbought, and the index dipped. You know, kind of early March, high, overbought level on the RSI, and then a dip. Now we're breaking out to all-time highs with these overbought levels. I don't necessarily think I'm chasing the FANG stocks here. They are above the rising 200-day moving average. The RSI is in bullish ranges, but overbought. And just for reference, within Chaikin Analytics, Facebook has a very bullish rating, and Google has a bullish rating. The other 3 stocks have neutral ratings. So, you know, if you are looking at the FANG names from a Chaikin perspective, Facebook and Google are the ones with very bullish and bullish ratings respectively. So kind of digging in now at the sector level, healthcare, technology, and energy are the top 3 groups. Consumer discretionary rounds out the quartet that has a ratio that is better than the SPY. So those are the groups where you want to be looking for your long ideas. Real estate, industrials, and utilities are the bottom 3. You can kind of see the staples have seen some strength lately, getting themselves out of the bottom 3, but I'm not a believer there yet. I think any strength that you see in these bottom 4 groups, you want to then isolate the weak names, these very bearish or bearish names, get them out of the portfolio or potentially look to short them. So I hope that everybody has a great Friday. You can get powerful, profitable stock ideas and more. Get your free Chaikin Power Feed at chaikinanalytics.com. Have a great day, everyone.